Okay, beautiful day. Okay, Rudy here, 11th of November. Welcome to the Daily Ninja Show. If you're new here, welcome aboard. This is where we go through the high risk, high return shares, ETF that surround this guy, the tank, which we use to build a portfolio to ride this resource bull market. If you haven't seen the tank before, I'll leave a video at the end all about him. Okay, on with the show. So MVR is just doing his job, up 1.5% today. So that's all we want him to do, just chug along. Our share market, so using the VAS ETF, I don't expect much to come out of VAS. I'll go through that reason. The only thing holding him up is the resource market. So this is the MVR to VAS ratio. So I expect that to continue. So why I don't have a bit of a deep dive today on the banks. So this is the XFJ, which is the financials, the big banks, and Macquarie. And I don't expect much joy. I don't expect them to crash, but I don't expect them to shoot up. Hence my VAS comments. So the all the banks, Commonwealth Bank had their thing today. So the summary was so the annual profits are flat, operating expenses up 10%. And helped by, so loan volumes are up, which sort of covered this high. A lot of that is wages. So the net interest margins were steady, but the thoughts are there's cracks showing. Now, net interest margin is basically the difference between what they pay in deposits after what they charge for loans, that little easy cream that they make, but there's cracks starting to show, and due to competition. So who's going to give the high term deposit rate versus loan rates, blah blah. And the outlook is for 1% earnings growth. So I don't think that's going to do gangbusters. So I think going forward, the big thing's going to be this, because they're going to look to cut profits, cut expenses. So we're going to see more like the ANZ redundancies, use of AI, because that's the only way that the banks are going to, well, try and grow more than 1%. So if we just go through the banks. So CBA reported today, and they didn't come clear on their net interest margins. They were a bit shady over it, so they got punished. So it'll be interesting to see what happens. They come down to this level. Might be, if you're into banks, a buying opportunity. ANZ. So ANZ sort of was the bank that beat the most of their NIM, like the market didn't expect as well as they did. In reality, they're just back to their 2015 highs. But yes, they pay dividends, I hear you, to the bank lovers. NAB, so again, it's back to its 2008 highs. So ANZ looks better than that. Westpac, same, back to their old highs. So I don't think you can expect gangbusters. Now Macquarie Group, it got punished because their windmill investment got tanked. Oh, funny that. Anyway, for those who don't know, when I was working in Sydney, I tried to get a job with Macquarie, but I wasn't successful. I think because I couldn't take the rooster with me to the interview. But if you like Macquarie, you'd want to be buying them now if you like it. I don't touch any of the banks. Okay, America. So much for our experts who are calling for a crash down to here. AI bubble, tech bubble. Like I said in my rant video, it is a concentrated market, taking up 40% of it, but they're all growing their earnings. So how can you crash if you're growing your earnings? Same as the Nasdaq. Nasdaq's going to crash down here. I don't think so, boys. Okay, on to the other one. Gold's going to crash to $3,500. Retest the breakout level. Okay, so gold. I actually did think it was just going to trade in this channel here. And I give hats off to a subscriber who said, Rudy, is that around the bottom on gold? I said, no, it's a channel. Anyway, that looks like around the bottom to me. So we're at a key resistance level here, and then the next one up here. I don't think it's going to go like that. It would be really good if it just sort of come back here and then floated around a bit and then went. So in those situations, what we do now, well, what do we know? If there's pullbacks, we buy. So that's all good. So our gold mining is so the XGD. I'll go to a weekly chart. Okay, so it's bounced. See there's those candles, the sexy legs. So Northern Star. So he'll probably take out that resistance level there. And the old switch Northern Star for CBA trade is back on again. They pay the same amount of dividend. I know which one is going to give higher growth. They're both banks. Just one produces real money. Okay, on to the ETFs. So miners, well done to people buying back here. Oh, it's going to crash down to here, the gold miners. Anyway, so GDX. So this is the one you can get in Oz Super. It's part of that model portfolio. The only difference between the two is miners is hedged, which is why I prefer it. Then you don't have to worry about currency working for you or working against you. So Newmont, that's a big holding in there. Wheaton Precious Metals, this is probably the world's best royalty company, so they'll get back in the channel there. GDXJ, so that's my preferred one. It's in America though. It's got all our companies, they don't have Northern Star in here because it's too big. Alright, and I'll leave at the end. I did a whole thing on our gold miners. I won't go through them, otherwise we'll be here all day. Copper. Okay, so I got this little interesting chart I found on X. Copper supply shocks set the stage for shortages. So this is 2026. So it's not getting any better, and that's one of the underlying themes. People ask, "Oh, why the resource cycle?" Well, because of this thing here. Like prices get low, so basically, prices get high, and then everyone mines it, and then there's too much of it, and then prices get low, and nobody mines it, and you end up with deficits. Just the way life works. So copper to me looks like it's going up more than down. This is the tariff thing, so it really distorts the chart, because really it's just in a big squeeze here. Okay, so the wire ETF, so that's the big global copper producers on the ASX. So you can see these. Anyway, it's a hold and it's still a buy. yeah, I was going to say, I've got to be careful because some people say, "Oh, Rudy, you said it looks good, and then they like here I'd be saying looking good. Yeah, that's if you bought it here. So I've got to be careful about when I say looking good. So that's looking good for a buy. CopJ, it's the preferred one. It's over in America. Again, it's got all our copper producers and developers in it. Okay, so some of our just signalling out some stocks. So AIS, there's that beautiful wedge that created everything. So it's come back down to the 20 weekly. And AMI starting to get its go again. So CVV, you probably wouldn't, if you didn't buy it, you wouldn't chase that now. Have still looks okay. Alright. So the Uranium gang. Okay, so the spot price, that's the candle there. So it's just sitting. But as I keep saying, all these big producers, they sell at a contract price at around this 90 level. So URNM, so it's just buy. The two big holders in there, so you got Cameco, they got $80 billion from Trump to build the big reactors. And Kaza, they're the world's largest producer. So probably just steady. So if you get any dips in URNM, then just buy it and hold. That's the other thing I should say. This is like a 5 to 10 year investment. I'm not trying to trade it. You can see what happened with gold if you try and trade it. You still wouldn't be buying yet either. So you'd be buying higher than your sell price. Anyway, get on with it, Rudy. URNJ. So that's it's got a bunch of our uranium miners in it. So again, buy the dips. So Paladin, that's fine. Just that he's still looking good. Okay, who's next on the list? Okay, the rare earth gang. Okay, so REMX, so that's the American version. Looking fine. So Linus had a bit of a down day today. So again, just buy, if it comes back to this 13.50, just buy it. Better off than waiting and buying that. And my preference is to go for producers. So MP, so that's the one in America. You can't buy it here, but it's sitting in the XMET ETF. So it looks like it's found a bottom. Aluka, looks like it's found a bottom too. Okay, so that's not much excitement in the little boys. Okay, medicine time. So Lithium, the first. So LitP, that's the one over in America. Yeah, I mean, look, consolidations like this can do it for a couple of months. It's good. So the lithium price. So it's finally starting to break out of this. This is the futures price. So starting to get a bit more bullish than I was on lithium with all this battery store. I've been listening to some lithium people, and this battery storage has got a bit of a gig to it. And I also heard that, oh no, that's nuclear, uranium. Silver, they need a bucket load of silver for the rods in uranium. I'm getting excited about. I'm nearly getting to her. Pilbara. So that's off now. And I found this on X. Bell Potter say sell Pilbara minerals. What's wrong with our experts these days? So Pilbara's an XMET. So IGO, Pilbara's, if you're going to buy one, Pilbara's the lowest cost producer, so that's my preferred one. But IGO's an XMET, looks fine. Liontown they all look good. Some other ones, so GL1's still looking okay. CXO still looking okay. Okay. Oil. So what's oil doing? Are they still? Let's go to a daily chart. Okay, so it's still holding this support level here. Natural gas. Wow. So it's right at resistance. It should pull back. Yeah. If it breaks that, that's pretty bullish. And obviously that's all good news for this guy, the king, my retirement stock. 7% div, and they will want to grow their div by 50% too. Approaching resistance. Now there's a screening buy there. Now if you're going to buy it now, just say you could expect it to drop to 25 bucks. I'm not saying it's going to, but like if you're going to buy it, because I think everyone should have this thing. Actually, he's the number 2 holding in MVR, so if you buy MVR, then you're sort of buying him. The fuel ETF, that's looking really good too. So that's full of people like this: Chevron, ExxonMobil, Shell. So another. They obviously don't. They pay distributions, not franked dividends, like Woodside. Okay, the other guys, so nickel, just sitting there. So NIC, NIC, that's the preferred exposure for it. What's iron ore doing? So iron ore, have they taken out those stops? Let's say it looks like it wants to come up. So MGX, that's the guys that had the rock fall. And FEX is starting to look good. It's broken out of the rounded bottom and come back retesting. Okay, now some sort of, I had this one on last week, this ANG. Now the company's really good. They're growing their earnings at 30%, pay a huge dividend, but someone dumped it this day. So hopefully no one bought it. I think it was the next day after I put the arrow on. But we're just going to watch it. Yeah. So just so you know, LYL. So it's PE of 9. So another low PE. So it's an old buy, but it's looking good. McMahon. So that's still looking okay. Worley, it's come down to a bit of level support. He's in the Oz Super portfolio. Coal, and there's a coal having a bit of a struggle at resistance here, so a pullback would be expected. So New Hope doing the same, approaching resistance, so pullback would be a good buying opportunity. Now I went through this metal MP Powderworks yesterday, and had a subscriber, Mr. Mark. He's been holding them. So this is, he's for 4 years, he says. So what a great investor. So he's faced all this pain But it actually, they've got gigs for the American Defence Force, and they're getting a gig to build the uranium reactors with their special device. So I just wanted to update you on that. Okay, on to the girl. Hopefully you saw the replay. Beautiful day. Okay, so she's above 50. All right, so now let's start to set some targets. So in the short term, so you got the 100% move. So 54 bucks. So that's, as long as it stays above 50, then 54. It would be nice to see a 54, then a pull back, and then giddy up. Because once she breaks this, you're not going to stop her. She's been let out of the cupboard. She's got her hot skirt on, her lipstick. She's been listening to you too. Oh yeah, and we wanted to do a and then not to get too excited, but like just to keep the eye on the prize, the intermediate eye on the prize. We got a big cup here. So where does that take us to? That takes us to 88. Let's just call it $90. So that's why you hold it through little $5 dips or $10 dips. That's what we're going for. And that doesn't. Yeah. Anyway, that's enough. ETP mag, beautiful buy if you bought it down here. Still looks good. Silj, all those people that panicked and felt shit and bought, well done. She'll be off. So the big holdings in Silj. So you got Heckler. So it's a bit. It's a beauty. And these are mammoth companies. Our silver companies are nothing. They are nothing compared to this. Kua. I mean, look at this. It's got all this. They're the ones, they bought a big gold company, a good one, and got punished for it. But this will rip back up. So First Majestic, same. It's got that to go. Endeavour, it's got that to go. So Silj's got a lot to go. So XMET, that's your if you can't get Silj as close as you're going to get. Good buying to those who did it. Would I still buy it? Yes. But remember, they're ninjas. Actually, so let's just see. So what was that? So that was a 17% pullback. So if you happen to buy up here, which is what I don't advocate. So if you're going to buy these ninjas, you've got to expect a 20% pullback. Otherwise, stick to the tank. And then I don't get all these messages. Oh, my account's been wiped out. Okay, so and actually our Aussie stocks haven't really taken off. I think they're all a bit nervous about what's going to happen. So ASL, BHM still looks good. So probably got good buying opportunities today. IVR, JBY, MMA, USL, My Kitchen Rules, Poly, RCM, they still look good, SS1, and the West Coast Eagles. Alright, that's your daily wrap. Say your prayers for the girl tonight. Say